Good evening, folks. It's Wednesday, March 22nd, 2023. Welcome to Fed Day. Um, the I started here with the regular charts for Thinkorswim. The index is all I'm going to focus on because I'm really trying to focus on our automatic trading systems, which I'll get into shortly. Having a little technical difficulties with stockcharts.com, so we're going to try to power through it. But if it doesn't work, I'm sorry, but I'll tell you what happened over there. So anyway, the Fed raised the interest rates, the target rate that they call it, by 25 basis points or quarter point, which was expected, and the markets went down quite a bit. So the Dow went down 530 points, or 1.63%. Over here on the left side is where I'm highlighting this columns or these rows. So that's the Dow. This is the Nasdaq. Went down by 1.6%, or 190 points. The transports went down by 2%, and oil. What did oil do? Oil went up by 0.62%. So that's good for me. Overnight action. We're getting a bit of a bounce for now. What's interesting is, so this is a big, over here on the right hand side where the crosshairs is, a big down candle, but it came back to this diagonal support level where we broke out of just a couple days ago. So that's what the market does. It breaks out to one direction and pulls back and pulls everybody underwater. I actually still think this is pretty bullish because we did the breakout. We do have a down arrow on the True Momo indicator down here. The most recent one is a down arrow. We are up and going green. I actually added color to this thing that gives you some other indication of momentum. The other day, it's a well-known indicator. I just kind of blended into that one. Basically, if it's yellow, then it's got bullish momentum. If it's red, it's bearish momentum. If it's the light blue cyan color, then it's bullish momentum, and if it's dark blue, then it's bearish momentum. And so really, I don't want to make it too much, but they generally will follow and lead each other. So like in this case over on the left hand side with the weekly, where the last indication of bullish momentum is the buy arrow, but we also have red on the True Momo itself. But I'm not actually sure what color that is underneath the squeeze there. It's actually in a squeeze. So I actually think this thing's still pretty bullish unless we get something that fails from here and we get a down arrow on the weekly along with the down arrow on the daily, and then we got a different situation. The Dow, it never got to the breakout. It actually looks like it went right up to the line and pulled back. It actually needs a bullish buy signal on the True Momo indicator for the day. We do have some indications of some of that possibly coming with these yellow arrows back here, and but we are in a down situation on the weekly chart. So we'll see how this has to play. What we really want to see, because it's Fed Day. A lot of times it's buy the rumor and then sell the news. So we had bullishness coming into the Fed decision, and then a big sell-off on the day. Well, a lot of people probably got short today and started trying to short the market so they can make money when the market goes down, and that'd be a perfect recipe for the market to decide to turn around the other way and take those people underwater. So that's how markets work. Yeah, if it was easy, everybody would be doing it. So here's our stockcharts.com. I'm going to type in bullish. We're going to try this. Like I say, if it doesn't work, I'm going to have to just tell you what happened. Maybe I'll hit a few highlights here. I hope they work. Here's the Dow itself. So while all that was happening to the downside, the bullish percent index which is actually measuring the amount of stocks in the Dow that are on a point and figure buy signal, actually flipped to a bullish condition. It's a new column of X's. So that's interesting. And that's only 30 stocks, so you can't get too excited about it. But then the S&P 500 is the one that really everybody looks at and uses as a market indicator. And it flipped the other day, and then it's actually added an X today. So that's interesting. And then the New York average, the New York Stock Exchange, it's not flipped yet, but it is bullish, or it's up today. It's up by 0.74%. So this is all going in the face of that, what looks like horrible market conditions on the downside. The NASDAQ itself, it's up by 0.92%. Then you get to the more volatile ones. The NASDAQ 100 is cranking right along to the upside, and the S&P 100 is also moving to the upside today, but 12.5% to the upside. So that's a big move. So isn't that interesting? It is to me. All right, and then we get into our automatic trading that happened, and we've been really watching this happen all quarter. Looks terrible. So this is what it looks like on a longer term chart. This is a 6-month chart, and today I went ahead and popped these in so we could look at, this is for 6 months. That must be further down on the, I just copied it down to where we had the total winning trades versus losing trades and that type of thing. So total number of trades 563 in 6 months, 124 are long trades, 439 are short trades, 42% all in, 42.81 profitable, 47.58 and 41.46 whether it's long or short. This is where the rubber meets the road. It's the average trade net profit. So in order to make 49,000 in 6 months, this thing traded it to make a gross profit of 282 and lost 232. So that's a lot of trading to make that happen, but that's how this works. I don't love the profit factor here. It's not really high enough, but that's because we've been enjoying this recent pullback. It should raise when you're in this condition for a longer period of time, or one of these. Oops. I think I flipped. No, I didn't. Yes, I did. Or one of these is what I'm talking about. So, anyways, hopefully that gives you an idea. This is the NASDAQ, which used to look like the Russell just a few weeks ago. Actually, it was looking down. It's looking great now. This is what it looks like on a 6-month basis, and this is what it looks like all in. It's a 1.28 profit factor. I'd like to get these profit factors, like them to perk themselves up to get to be like a 1.4 or 1.5 even. Don't really care. A lot of people who do this type of like trading and explaining this stuff really think a profit factor matters. I really think the profit itself and the equity curve, and I really try to reduce the amount of total trades all in. I try to get the equity curve to go nicely slanted up, and then reduce unneeded ones by doing away with some volatility in my programming. So here's the Dow, and it's still fine. It's actually trying to look like it's perking up here. It looks okay. I hate this big dip that we took, but it looks like it's trying to come back. And again, all in, it's a 1.25 profit factor, $80,000. It trades 1,080 times in 6 months, but all in, you can see the numbers. So the numbers and the equity curve really speaks for itself. And that's what I got for you guys tonight. Take care, and hopefully tomorrow reverses nicely and works out for your positions. Take care. See ya.